Wall Street's up to their old manipulation tricks, folks. I got some very important things to show you in today's video that I think is going to open up some folks' minds on some of the manipulation that Wall Street kind of does out there, how this stuff works, how's this stuff even legal. I got some other things to talk about in today's video as well, okay? That's going to be what we're going to talk about here at the beginning of the video, is kind of this manipulation, kind of what goes on, especially, specifically on Fridays. But I also want to talk about a stock that I bought here today in the public count, how heavy I want to continue to buy that stock moving forward, and show you some other things that are going on in the market out there that I think are very, very important, and some other perspectives on a few other stocks out there as well in this video. So I hope you guys enjoy this. Hope you get good value out of it. As always, I appreciate every single person that subscribed to the channel. Thanks for being here. Everybody that's part of the Patreon squad, thank you for supporting the channel. And also, I just posted the moves I made in the Patreon portfolio. Whether you've been investing for 10 days or 10 years, you have to join us in the Patreon. It's like $2 a week. It's a no-brainer. That's going to be pinned comment down there. You get to see all the stocks I'm buying each and every week, and if I'm ever selling stocks, you get to see that as well as the entire portfolio in there. Okay, so definitely check that out. That will be pinned comment down there. It's a no-brainer. Join in there. Okay, we're going to come back to this chart here, this Max Payne. We'll speak about that in just a moment. Okay, but first I just want to kind of explain this concept. Okay, Max Payne on the maximum Payne price is a strike price with the most open option contracts combining puts and calls. It is a strike price that causes the highest dollar value of losses among option buyers on a given stock at a specific expiration. Now, we know retail investors specifically love to buy straight up call options and straight up put options. It's always the most popular, right? According to the Chicago Board of Options Exchange, about 30% of the options expire worthless. Completely worthless, okay? 10% are exercised, that's not a very high number, and 60% close out before expiration. The concept of Max Payne focuses on the 30% of options that expire with no intrinsic value. This is key, okay? Some large institutional option sellers see an investment opportunity in writing options that eventually expire worthless, according to the Max Payne theory. If options expire worthless, the seller of those options keep the entire premium as profit. Ooh, isn't that beautiful, okay? Max Payne options trading stems from the maximum Payne theory. The theory contends that option sellers seek to hedge portfolios with options expiration. The maximum Payne theory also suggests an options price will arrive at maximum Payne price where the most option contracts held through expiration will experience losses. Bear in mind that these option contracts, that it's not necessarily in the money at expiration, is worthless, okay? Let me take this a step deeper here. The maximum Payne theory asserts that the price of the underlying asset is likely to converge at the maximum Payne strike price. The max Payne price is a strike with the greatest dollar value of calls and puts. As of the expiration date approaches, the underlying stock price might pin to the option strike price. Some day traders closely monitor the Max Payne price on the afternoon of expiration, usually the third Friday of the month for the monthly options that expire each Friday, right? For weekly options contracts. Max Payne trading can be controversial, as some believe it borders on market manipulation. Market manipulation, when traders seek to pin a stock price to a certain price at a certain time. Market participants disagree about whether or not Max Payne theory works in practice. If a trader can predict which strike price will feature the greatest combination of dollar value between calls and puts, the theory states that they could profit using that information, okay? This is obviously borderline market manipulation in regards to this, right? And they'll do a lot of different tactics in regards to this, right? And this stuff is so hard to prove on what's going on and what's not going on, okay? But if you just look at the NASDAQ today, right? We're not even looking at just an individual stock. We're looking at the NASDAQ as a whole. This on an options Friday like this smelled like a Max Payne situation, okay? So they basically kind of tanked the market in early trading, right? through the halfway point of the day, which just completely wrecks your calls. If you got calls that are expiring here, okay, you're just getting absolutely obliterated. You're in the situation where your calls are going to expire worthless, or you're going to have to essentially like panic sell your calls off, right, for like a penny on the dollar, essentially, right, and try to get anything for them, right? So they wreck the call holders. And then what do? After lunchtime, essentially, they wreck the put buyers, okay? And I got to give Mav credit for this, because Mav called this out specifically in last night's video, and he was talking about they would set the market up like this, and he was right on in regards to this, right? Mav's not always on everything, but I can tell you he deserves his credit in regards to this. He was right on in regards to this, because he called this out, and he said, wait till after lunch. They could, switch the market whatever direction it was going in the morning. They'll switch it around lunchtime. And that's exactly what played out, right? And so the call buyers, they all got wrecked in the morning, and then they wrecked the put folks later on, okay? For the market just to end up doing nothing, and just people got wrecked across the board, right? But let's take this a step further. Let me show you the previous Friday, okay? This is last Friday. They did the same exact thing. I mean, literally the same thing. They screwed your calls in the morning, and then they screwed your puts in the afternoon. The same exact phenomenon, 2 straight Fridays now. They just screwed everybody over, right? And when there's not like any sort of like big news on a Friday, you can do this. Like the market participants can kind of manipulate the market whatever way they want, right? If you got some big earth-shaking news that comes out, it's going to screw up all this. You can't do it like that. But today was no big news. Last Friday, there was no big news really on that Friday, right? So on those sorts of days where there's no big news, that's really like, making the market, forcing the market up or down, that's a perfect opportunity to really screw all these folks and just cause max pain out there. And so the call buyers get screwed, the put buyers get screwed, everybody gets screwed except the ones that really write the options. And guess who's usually writing the options, okay? It's not retail, okay? And the way I'll put it to you like this, right? Because so many people want to play these short-term games, and they think they can one-up Wall Street, right? And I live in Vegas, okay? And this is a city that's obviously built on, the house versus a player, right? And I can just tell you guys, this is just one of many reasons I always kind of preach against all the short-term stuff that people try to do. Because all you are is a player in the casino, okay? That's all you are. You're just a player in the casino when you're trying to play these things on these short-term, moves here and trying to outsmart Wall Street. Like, they have this stuff down, man. They have this stuff down. No different than, you walk in a casino, every single game you think, oh, maybe I got some advantage. They have the advantage over you in every single game you walk into that casino, every single last one of them, okay? They always have it figured out. They always have it figured out. And so in stock market terms, you can turn this game into a casino if you want to start playing short-term stuff, but just understand you're always at a disadvantage. Doesn't mean you can't win sometimes, but when you're trying to do short-term stuff in the market, you're just the casino. I'd rather be the house, okay? I'm the house. I own the assets. I own Tesla. I own Amazon. I own, this company, that company. And so everybody else can come into my casino and play with my stocks and send them up and send them down, and everybody's winning and losing and doing all this, right? But at the end of the day, my assets are going to go where my assets go over time because I'm the house. I'm the casino, okay? I'd much rather be in that position than be the player. And, I think a lot of people just think they can outsmart it, or they're in it for the fun, right? It's thrilling to like, oh my gosh, I can make or lose, $100 here today. And that 100 can go to 0, but it could also go to 1,000 maybe, or 500, right? And so they treat this game like it's a casino. I'm just telling you, like, ask anybody that comes to Vegas, goes to Macau, goes to casinos. You might win every once in a while, but I can tell you you're going to lose it all by the end of the whole game, okay? And this is how people lose their entire portfolios. Like, when you go on Wall Street Bets and you see people blowing up their accounts, like, how does that happen? Because they're doing stuff like this. And, just understand, these folks on the other side, they got it all figured out. And they might lose every once in a while, and that's fine to them. But the majority of the time, they're going to win. They are the house. They are the casino. And you've got to view it in that way, okay? And so if you want to gamble, just understand you're not doing anything other than gambling when you're doing those short-term stuff. You're just basically another glorified person that's going to Vegas and thinking you're going to somehow outsmart the casino playing blackjack or something like that. That's all you are, okay? That's all you are. Your long-term investing, it's a whole different, you're owning the casino, okay? You want to be a long-term investor, own the casino. Don't be a player in the casino, okay? They got this whole game figured out. And I got to say this, okay? I probably never said this before, but I got to go on record and say this. Tesla stock's possibly the most manipulated stock in the entire stock market. This is a company I personally own, right? There's no doubt this is likely one of the most manipulated stocks I've ever seen in the market. It is insane how manipulated this stock is in the short term, in my opinion. So many people playing this from so many different sides, on the upside, the downside. The moves are so unnatural many times in Tesla, right? And so this is one of the most manipulated stocks in the market that people love to try to manipulate certain ways, certain directions. Sometimes it's on the downside, and that's why you see Tesla make these ridiculous downward moves that it's like, how did Tesla go down that much? It doesn't even make sense. Like, it's ridiculous, right? How did Tesla go to $100? It's just stupid. Like, what are we talking about here, right? And you might say, well, how did Tesla go to 400 a couple years ago, right? That's also was ridiculous at that point in time, given where the company was, right? This company is one of the most manipulated in terms of the stock price. The gamma squeezes, all this stuff. Oh my gosh, okay? It's one of the most, if not the most manipulated stock in the market, in my personal opinion, on a short-term basis. And, you look at a day like today, and all of a sudden, around lunchtime or so, or just before lunch, the next thing you know, Tesla makes this insane move from under 198 all the way to 208. There's no news there. There's nothing that came out, right? That's a $10 a share move. That's a very, very large move. This is a very, very heavily manipulated stock. And so when it comes to, these stocks in the market, right, just understand, when it comes to a short-term basis, you might think you got it, but you likely don't, okay? And they'll manipulate things other ways that you never saw coming. And, I went through this. I thought I could outsmart Wall Street, okay? This was in 2015. Keep in mind, I had a super successful track record of long-term investing, focusing on companies for the next several years, making these investments, Monster, Cabela's, Trinity Industries. I had all these stocks that were just banger after banger after banger, okay? And I got a little too full of myself, and I thought I could start outsmarting Wall Street. So what I started to do is it was kind of like, I think, mid to late 2014 and going into 2015. I set up a margin, my account for margin, and then I started doing earnings trades because I thought I could outsmart Wall Street because I knew with pretty good, I followed companies so closely that I basically kind of knew if they were going to beat or miss on their earnings, okay? And so I started playing these option bets, not option bets, like margin bets essentially, and margin out money on stocks and putting like $100,000 in a stock because I'm like, I know this company is going to beat. They're going to beat on revenue, beat on EPS. And then they'd come in with their beats and the stock price would go down because of one reason or another. It was all manipulated crap. And I'm just like, seriously, and I would lose $10,000 in a day. And that was a ton of money for me back in those days. $5,000 in a day, $7,000 in a day. And I'm like, how is this happening? Like, my company just killed it. This company killed it on earnings. And it was one reason or another. It was like, oh, the guidance wasn't quite there. This margin number was off. Whatever they could use as an excuse. And next thing you know, I lose, a bunch of money on that next day. And it was like, seriously, man, just understand, you're playing anything from a short-term perspective. You are a player in the casino. You are the sucker. You are the sucker, 100%, okay? Just understand that. You either own the casino or you're a player in the casino. What do you want to be, okay? I'd much rather own the casino than be the player. That's like, the one has a big building and one doesn't, okay? That's all I'll say about that. Now, Amazon stock. So Amazon stock is a stock I bought here in the public account today, okay? And I know there's a lot of people that kind of want to know my opinion in regards to how big of a position do I want to build Amazon out. So first off, I think Amazon is going to see a pretty epic increase in terms of their earnings per share, their net income over this next several years. I think it's going to be dramatic. I think it's going to far outstrip their revenue growth, okay? So meaning essentially, let's say Amazon grows revenue 12% a year. I think, their net income could easily be up 20, 30, or 40% over this next year. Like, it's not even going to be remotely close, okay? They've had a lot of cost cuts here recently. Those will start to play out for this company moving in future quarters. And they've just kind of stabilized some of their other businesses in general that are going to stabilize more in 2023. And so in terms of this position, I really want to build this out into a position that's six figures plus, okay? Meaning at least $100,000 in the public account. That's where I want to take this position over time, and that's where I hope I can take it. Obviously, I'm down on it right now, right? down about 6%. But yeah, I kind of hope it keeps going down short term. This is why I'm kind of hoping, like, maybe we get another bear market move down, to push the NASDAQ down, push the SP 500 down. I'm not counting on that. I'm not holding my breath. That's why I'm going to continue to build out this position. But if that happens, I gladly welcome it, because that would push Amazon down back under $90 a share, which I would absolutely love. That would be perfect. So we'll see what happens in regards to that, right? Now, I want to point this out because I think this is very important for everybody watching this, right? Everybody gets so caught up into sometimes trying to play these short-term moves and being a player at the casino, right? And many times other folks, we get caught up in the growth stocks, right? And the Teslas and the Shopify and like all the other growth stocks out there, because they're very exciting. They give, extreme returns. You can sometimes buy them for very undervalued prices, and those deserve a lot of attention. But what also deserves a good amount of attention, to be quite frank, is dividends, right? This is my dividends only account, right? Look at the money this throws off. I did the dividend view on Fidelity. This account throws off $5,671. Now keep in mind, most of these companies are going to raise their dividends this year, okay? So I'm going to likely generate myself in 2023, I would say over $6,000 of dividends will be paid out to me just for holding these stocks, right? Now, almost every single one of these stocks is green as well. So I obviously get share appreciation over time as well, right? But that's kind of beautiful. I think within 2 years, I will be collecting over $10,000 per year in dividend income just on this one account, my dividend only account, right? $10,000 a year within 2 years, like, I'll be very happy with that. I still remember making $40,000 a year, right? And to basically just hold stocks and make myself $10,000 a year in my dividend portfolio. And imagine as that portfolio gets built out, right? Someday that's going to be $1 million plus account, right? Someday instead of $180,000, this is going to say $1.8 million. And so someday this is going to be a portfolio that throws me off several $100,000 per year, okay? We're talking $200,000 a year. That's what it's going to throw me off in the future. It's probably going to take me, I would say, maybe 5 to 10 years to get it there, okay? But someday this account's going to throw me off 6 figures, if not multi-6 figures, every single year in just dividend income. That's like, you can retire, you can travel the world, you can do a lot of different stuff. You get paid, $100,000, $200,000 a year just in dividend income. And remember, dividend income, that is taxed at, a super low tax rate. Usually it depends on kind of where you're at, but like 15, 20% type tax rate when it comes to dividends. That's another incredible part compared to obviously ordinary income, which is usually substantially above that. So nonetheless, don't forget about dividends sometimes. I understand we get caught up in the growth stocks and all this other stuff going on, but man, you can make so much money. And as you build your portfolios and the numbers compound over time, and this just kind of shows you even with smaller amounts of money, how it can just compound over time, right? And, especially reinvesting that dividend money. That's the key, right? You get paid out, let's say I'm going to probably get paid out $6,000 plus in dividends just in my dividend portfolio alone this year, right? I think between all my portfolios, maybe it'd be $10,000 something dollars, right? But just in a dividend account, $6,000 plus. I'm not going to take out that $6,000 plus this year and go spend it and say, instead of an 85-inch TV, let me buy a 95-inch and let me go buy another chandelier or something like that. I'm going to go reinvest that money. So all $6,000 plus I'm going to get paid out in dividends this year. I'm going to go and reinvest that money. So then that money makes me a bunch more dividend money as well. So the numbers compound bigger and bigger and bigger and bigger over time, right? Plus I'm consistently buying that account $250 every single week. So that starts to compound. And the snowball gets really big and pretty epic. And over a 5-10 year span, it becomes a very fun game. A very fun game as your account builds bigger and bigger over time. And like I said, and that's why my approach always in the market, GVD 1, 2, 3, right? Growth, value, dividends. If you see my Patreon portfolio, that thing is a masterpiece of a combo of growth stocks, value stocks, and dividend stocks, man. It's just, that's where my full focus and attention is, because, sometimes growth stocks are going to be the ones that are hitting. Sometimes it's value stocks. Sometimes it's dividend stocks, right? Different stocks perform well at different times, but that dividend income coming in all the time to reinvest. Because even if you're in a flat market, right? What if you're in a flat market? Well, if your stocks aren't going up, right? If Amazon's not going up and Tesla and Shopify or whatever, well, if you own dividend stocks, you got all that money that you can buy those shares for very cheap prices, right? That's the beauty of dividends, right? I want to take you in for a moment inside the private stock group, the private wealth group, right? Which, if you're looking to apply to join us in there, in my private wealth group, my private stock group, check out the description area. But I just want to show you something very important from our weekly investor report that Trevor and myself put together each week for all the members in there. It takes you maybe 30 minutes to 45 minutes to go through it all and just gets you super knowledgeable on what's going on in the market, what's happening out there. But I just want to show you something really crazy here. Check this out, okay? This is a NASDAQ top 10 stocks so far year to date. Okay, Tesla is number one, 64% up year to date. Airbnb, 63% year to date. Warner Brothers, 61%. Lucid, I'm surprised, 55% year to date. Align Technology, this is like the invisible braces and stuff like that, right? 54%. Nvidia, 50%. Meta, 43%. I mean, look at these moves for these stocks, right? Let me take it a step deeper here and show you the S&P 500 top 10. I mean, look at the moves, right? Tesla, 64%. I mean, these moves are incredible, right? Some of these are the same from the NASDAQ, right? Even Norwegian Cruise Line, Royal Caribbean, 49%, 45%, Carnival, CCL, right? Meta, 43%. And so the moral of this story is, okay, the moral of this story is, even if you felt like we're in a bear market rally right now, right? Which I don't know, it's gone on too long that it doesn't really feel like it anymore, just to be quite frank. But let's say you're of that thinking and that thought process, right? The important thing to understand about this is look at how fast these stocks move when the market just gets a little momentum behind it, right? The NASDAQ, it has gone up, year to date. The NASDAQ's probably up. Oh gosh, let me check. I'll check it right now while I'm on my phone. Okay, what is it? Does anybody know off the top of their head how much the NASDAQ is up year to date? If you know that, you're really up to date on the market. I would guess 8%, but let me see year to date. I was way off. Okay, NASDAQ's up 13% year to date. I was way off on that. 8%, maybe that's more like S&P 500. Okay, 13%. So you get a 13% move in the NASDAQ, and then you see those stocks flying 40%, 50%, 60%. And so I think that's just a lesson for everybody out there about, one, the danger of shorting, because shorts have been getting absolutely obliterated. Remember, a lot of these shorts, they don't just like to short, they like to buy put options. They've been getting, like their puts are expiring worthless week after week after week after week. They're losing their entire portfolios in this, right? But when you see that, just understand when the market gets momentum behind it, these stocks move, man, and they move huge. And so just understand that's why I always work with urgency in this market. Meta was, when it was going down $100, below $100, I was buying so dang heavily. Why was I doing that? Because I understood it's likely not staying there forever, right? It's likely going to make a big move off of there. And I don't know if it's a week from that or a month from that or 3 months from that, but I got to move with urgency. And so when you see stock prices moving at stupid prices, you got to pounce. You got to make those moves, man. And if it goes lower, as long as you have more income than expenses, you can always buy more shares. There's no fear with that. So I think that's important for everybody to understand that's watching this video right now, because, yeah, man, the moves are substantial when the market just gets a little momentum behind it. Hope you guys enjoyed today's video. As always, I appreciate everybody that subscribed to the channel. Make sure you join us in Patreon. That is a no-brainer. It's like $2 a week to be part of that, and you get to see all the buys and sells I'm making in the portfolio. Like I said, if you've been investing for 10 days or 10 years, that's a must join. There'll be a pinned comment down there. Appreciate y'all. Much love, and have a great day.